Do you think your clients who have been it's not like you were calling them up, they were calling you and they were saying, we want to get in. And this was on Thursday and Friday as we were down 6%.
I think a lot of people are trying to take this in stride. You know, the problem is throw out the models, throw out the playbook. There is no plan for this. I mean, unless you're inside the president's head, you don't know when this is going to end. And so most of the clients are saying, okay, there's a market disruption. What can I do to take advantage of it? And so I'm seeing a lot of that. A lot of people want to do, if they have retirement accounts, they see dislocation in some of their favorite stocks, they're doing in-kind Roth conversions. They're doing what they can do to take advantage of the price dislocations while they exist. In addition, I've seen a lot of people come in and step in and buy. They've been wanting to buy some of the tech stocks. They felt like they were terribly expensive. Now's their chance. But I will say, Kelly, the majority of people are just sitting on their hands, just waiting to see and letting more information come in before they start making, big decisions with their portfolios. When the absence of information and the absence of really understanding what's going on, a lot of really smart people will just sit and wait. And if you're a long-term investor with portfolios that are balanced and diversified, that's largely the right decision for you. And I think that's what most people are doing right now.
Yeah, I hate to get super in the weeds here, but when you say in-kind Roth conversions and stuff, I think, are there other kind of tactical moves people can make here? Some were asking about switching out of one S&P fund into another to kind of capture some of the losses, but you got to be careful with the Roth rule and that kind of thing. Any other tactical advice like that you can share?
Well, the in-kind Roth conversion is probably one of the best. I mean, you can, and the reason is, not to get into the weeds, but just to explain it briefly, if the stock, your favorite stock, Microsoft, Apple, whichever it is down 10%, 20%, and you can convert that stock in kind from a traditional IRA to a Roth, as the stock reappreciates in the Roth IRA, you've been able to sneak tax-free value over to the Roth IRA. So it helps to offset the tax cost of doing the conversion. So that's one of the principal ones that I'm working on right now. But apart from that, it's just if you have some stocks that have done pretty well, utilities or things like that, to sort of help buttress your portfolio, you have an opportunity to rebalance. That's a responsible thing to do right now. When you see asset prices drop sort of in concert, sort of a synchronized downturn in all asset classes, They can't all be priced correctly. So you find the ones that that have the better chance of having earnings growth in the future, and you buy them. And the other ones that you sold, you're likely to do better.
We got to go, Jamie, but would you have clients buying bonds here, 10-year, 30-year bonds? I mean, I almost see this cascading effect where just the U.S. is going to buy the debt. Maybe it's a mini stimulus plan that can benefit from the interest. It replaces foreign buyers if, in fact, they are going to vanish. But that's only going to be the case if the concerns that we have about inflation and the deficit that Mike just outlined are not going to remain front and center.
I don't see people running, racing to buy treasuries. Not at this point, no.
All right.
Not at all.
Doesn't sound like you're recommending it either.
No.